We are in such a state of change. We've gone from an entire world being in QE to quickly changing. We've had 43 central banks make 253 basis point moves to total 22,000 increase in basis points over the last year and a half. That is a complete reversal as to what we've done.
I will be stunned if we don't have a recession in 23. Don't know the timing, but certainly by the end of 23. I will not be surprised if it's not larger than the so-called average garden variety.
I think the biggest mistake priced into markets right now is the belief that we're going to return to essentially pricing similar to pre-COVID. Earnings are priced to continue to grow at a relatively normal rate from here. So I think that is probably the biggest mistake being priced in.
We've got globalization turning into deglobalization. We've got offshoring turning into onshoring. We've got energy vilification turning into energy independence being a very important thing.
If Stan Druckenmiller's right, let's just stipulate he is, and we go into a deep recession late next year, then we're going to have had millions of Americans unemployed. So for choice, if I am the Fed, I want to try to bring inflation expectations down, but I don't want to create a hard landing.
Just when you thought things couldn't get any crazier, they get crazier. Inflation in Germany was expected to come in at 10%, and it came in at 10.9% this morning, nearly 11%. And what follows is something you can't even make up. Germany agrees on a 200 billion euro package to shield against surging energy prices. This is starting to look like a death spiral for the global economy, guys. This is a global recession. The entire world is feeling the pain. China is already way down ahead of the US. Could be a leading indicator that it's going to get worse here. And this is just getting really out of control. Now, this goes back to something that I said recently. And I was talking about how it's time to start, thinking about the risk of inflation staying higher for longer due to economic warfare. Now, think about this, guys. The US has weaponized the dollar. Look at this. The US dollar is mooning against all other currencies. This is survival of the fittest. US dollar is winning right now on that front. Now, check this out. Russia has weaponized its commodities. Now, this plays in because Russia turning off the taps to Europe, creating an energy crisis. What does that mean? What does that mean for Germany? It means they have to start printing money amidst the highest inflation print in years. So inflation's sky high, and now they have to print more money because, guys, it's economic warfare. So this is what I meant, and this is what they meant in that CoinSwiss report as well. It's time to think about the risk of inflation staying higher for longer due to economic warfare. The inflation rate right now is the story is shifting. It's changing. It's less about the stimulus reopening after COVID problem, and now it's becoming an economic warfare issue. Energy crisis, they got to basically bail themselves out by printing money. Bank of England going into full crisis mode, sort of panicking. They're going to be basically using quantitative easing, printing more money to whatever scale necessary. And here's when things just get wild, is we have, again, inflation sky high. Because of economic warfare, people are printing more money, which is going to make inflation even worse, which means interest rates have to be raised even higher. And it's not just about the US and our spending. When other countries like Germany, like in England, start to print more money, that actually means that the US has to raise their interest rates even more to combat that part of the inflation. This is a global thing, right? Because of globalization, we're all really tied to one another and everything starts affecting each other much faster. So this could get worse, guys. And now what's happening, like you saw in the beginning of the video, is because of this, countries are wanting to cut ties from one another. They want to become more independent. So we're going from globalization to deglobalization. US and China relations are starting to degrade. Again, globalization is turning into We are deglobalizing. China's talking about invading Taiwan. The U.S. would have to respond to that. Russia invades Ukraine. The U.S. is dealing with that. We are witnessing deglobalization, and energy independence is becoming more important. Guys, I'm saying all of this stuff not to scare you, but to show you the massive changes. It's everything from the ground up is just being completely changed. A major macro shift is happening, guys. The entire structure is changing, and parts of the system are failing. And so there's going to have to be a complete reorganization of everything. So to think that, we're just going to bottom out and it's up only again, because that's all my generation knows. All my generation knows is that every time we dip, a new all-time high is close. Every time we dip, a new all-time high is close. That's what my generation knows for the past decade. It may not be that way. Because right now we're seeing all of this stuff, inflation sky high, rising interest rates, which is putting pressure on businesses. And we're also seeing consumers becoming more conservative, spending less money, which means earnings for companies are going to start decreasing. And that's going to start to have to be priced into the market because, as Ray Dalio said, the market is not pricing in an earnings recession yet. So the markets are going to have to discount for that now as well. And it's likely that this is not going to end soon. It's not just going to be one day it's over and we're good to go and everyone's happy again. No way, guys. This is a total change in the fabric of the global structure. So the dust has not settled. And any short-term action should just be considered short-term action, right? It's not, right now we're well below the macro trend line for the S&P. Sitting above the 200-week. The 200-week is really the recession threshold. And once we get below the 200-week, then it's truly, we're entering, correct pricing for the current environment is below the 200-week. That's where we should be right now if the markets were going to be truly pricing in the reality of the situation globally. And so Bitcoin is basically in the same position as the S&P. I know people recently were saying stuff like, oh, Bitcoin's holding up against the S&P. It is kind of. It is kind of because the S&P hit a lower low today, lowest lows of the cycle, and Bitcoin didn't. So, okay, there's like a little bit of difference there in the short term. But do you guys remember from the June lows up, people were complaining about Bitcoin not bouncing as much as the stock market? But now they're cheering that it's not going down as fast. But guys, look, June lows, November prices, Bitcoin, June lows, November prices. It's basically in the same spot with a slight difference on the daily time scale. Basically the same. The only real factor that I'm considering now is maybe if the system truly starts to break, maybe that would actually make people become more serious about the idea of Bitcoin being a true alternative. If something like this happens, things get so bad, maybe Bitcoin decouples based on a complete lack of trust for the traditional system. Possible, not happening yet. You can't make that claim on a daily timescale. You would have to see a multi-month decoupling. Multi-month, at least a multi-month decoupling. You can't say that Bitcoin decouples based on a 1 day, 2 day, 1 week timescale. Every time anyone's ever claimed that Bitcoin has decoupled in the past, it was wrong. It eventually snapped back into correlation. The decoupling claims have been correct 0 times. They were always wrong. But an issue like this, global financial meltdown, right? All these issues could maybe change the public view on Bitcoin. And what matters when it comes to a decoupling is human behavior and how humans treat Bitcoin and how humans regard Bitcoin. Maybe it could change, but it would take a while. It would take a long time. And if you're calling a decoupling based on a daily, weekly timescale, I would say that's buffoonery. You're being a buffoon because you can't do that. It has to be a lengthy period of time before you can say there's truly a decoupling. So this is something we're going to have to analyze for a long time. There's no evidence to support it yet, but we'll see. Even people like Stanley Druckenmiller have been talking about maybe Bitcoin decoupling based on the lack of trust for the system and being like a new Renaissance era being driven by crypto. But again, this is all pie in the sky fantasy until it actually happens. It's correlated until it's not. And right now, they are in the exact same double bottom November prices position. Okay? I would love to be wrong about this. I would actually love to be wrong and people to say, see, Kev, Bitcoin finally decoupled. But, you know, again, it's going to take a while before we know that for sure. So far, exactly the same setup. But that is just all of my thoughts for today, guys. Remember, this is economic warfare, and the risk of inflation staying higher for longer due to economic warfare is a real risk. And things can kind of spiral out of control more than you think, because every country is at each other's throats right now, and it is survival of the fittest. And currently, cash is king once again, at least the US dollar, not everything else. Survival of the fittest, economic warfare. Strap in, guys, because I don't think it's over yet. I don't think the dust has settled yet. And it's truly unpredictable. So I'm just going to take things as they come. Just want to share my thoughts. Hit the like button, subscribe to this channel. I'll see you guys in the next video.